Hey guys, welcome back. Today we're going to be talking about mortgage forbearance. This is going to be an update on the video that I posted a couple of days ago to kind of keep you in the loop of what's going on out there in this world of delaying mortgage payments, that sort of thing. But before we get into that, I want to say thank you for taking the time to watch. I do appreciate it. I appreciate all the messages that I'm getting on the videos, all you guys reaching out to me directly, asking questions, and also giving me the feedback that actually where the information that I'm providing today is coming from. So thank you guys who are doing that. Again, I'm Jeb Smith, Coldwell Banker Realty here in Huntington Beach, California. And if you haven't already, do me a favor, hit the subscribe button. If you're interested in what's going on in the real estate mortgage world, especially right now with the coronavirus and updates happening on an hourly basis for the most part. I mean, these updates are happening days and hour, not only every day, but hourly in the day. And so, I'm trying to keep you guys informed and in the loop so that you can make, informed decisions going forward. So anyhow, I appreciate you taking the time to watch. So let's get into it. And so, what I mentioned the other day is that if you are currently in a financial hardship with regards to what's happening in the COVID-19 world, which means a loss of job, you've been furloughed, any sort of income situation that's affecting you to where your ability to make your monthly mortgage payment is going to be hindered, if you will. So what the federal government has done is requested that banks, your lender, whoever you make your mortgage payment to every month, consider doing some sort of forbearance. So a forbearance is basically a delay in making your mortgage payment. Doesn't mean the payment goes away, as I mentioned before. It just means that they're giving you more time to make that payment or allowing you to skip months and then pay that interest, that principal at a later time or over a period of time. So that's what I mentioned a couple of days ago, and so I'm going to address what I'm being told out there for people that have actually reached out to their banks, the programs that are currently being offered, and also address a couple of questions that I've gotten with regards to, not being in a financial hardship now, but should I reach out to my bank, that sort of thing. So with the people that have reached out to their banks, this is what I'm hearing back from those people with regards to the options that they've been given in order to delay their mortgage payments. And this has been pretty consistent with, I think there's 4 different people who have reached out to me directly and a couple people that have commented on the videos online. And the consensus is pretty much across the board with regards to what's being offered at this time. But keep in mind, this stuff changes. So I encourage you, if you get feedback from your lender, continue to call, continue to ask if there's new programs available, ask what the options are. So currently what I'm being told is there is a one option that allows you to basically skip 3 months of mortgage payments. So you'll be able to delay those 3 mortgage payments, but the caveat is in the 4th month, those 3 mortgage payments that you skipped along with the 4th payment are due, all in the 4th month. So that means if your payment's $3,000 a month, you're able to skip those $3,000 per month times 3 months, so $9,000. But in the 4th month, when your 4th payment's due, you're also required to pay those other 3 payments. So you would actually be paying $12,000 in that 4th month. That's not going to help a lot of people because if you've missed your job and you're losing income, how are you going to come up with all of this money that you don't have now in 4 months, especially if this thing continues? Second option is, hey, instead of paying $3,000 per month, we're going to use the same example of the $3,000 a month payment, pay us a portion of that. So say half of that over the next 3 months. So that $1,500 per month, and that additional $1,500 that you're not paying is also due in the 4th month. So basically what they're saying is, hey, we'll allow you to make a lesser payment now, but in the 4th month, we want all those payments that we allowed you to pay half of, we want the full payment due in the 4th month along with the 4th month payment. So it's essentially the same thing as the first, but you're paying, it's kind of like layaway. You're paying a little bit, and then at the end, hey, here's the lump sum that's due. Again, probably not going to help a lot of people unless, for example, you're getting some sort of lump sum of cash at the end of the 4th month that's going to catch you up, or that you're currently laid off and you're going to have your employment back by then. In that case, it could work. But for most people, that's not really a viable option. And so That's why I'm encouraging you, if you're in this position, to, still contact your lender, tell them that you're having a problem. Don't let this just go to the wayside and not make that communication. Even if these options don't work for you, make sure you're reaching out to them. Make sure you're staying in contact, because they make notes, right? And you can always go back to those notes when you've reached out to them, or what have you in the future, and say, hey, look, I contacted you several times, none of those options worked for me, so on and so forth. So still make sure you're reaching out, even if those options don't work. And continue to stay in touch and ask for new programs, right? Because my assumption, again, I know what assume means, but my assumption is that as this progresses, assuming it gets worse, which is what a lot of people are saying, and a lot more layoffs are going to happen, a lot more jobs are going to be furloughed, chances are these lenders are going to have to come up with another option, right? At the moment, you have to consider that even though these mortgage companies are allowing you to skip a payment, say for 3 months or what have you, the reason they're requiring it due in the 4th month is because even though you're not paying that lender or that servicer, that lender still has to make their payments to the investor that owns that loan. Just because you're making a payment to, say, Mr. Cooper or PNC Bank or what have you, that doesn't mean they own the loan. They probably just service that loan. There's somebody else out there that owns that loan. And so even though you're not making the payments to them, they're still required to make their payment to the investor, to the person that owns that loan. So these banks are really, tight on cash, and it's going to get worse. And so these banks are afraid to delay any payments past a certain period of time, because they're probably going to be tight on cash as well. And so they're still having to make payments, and they don't want to put themselves in a position. So understand that it's not the banks being greedy or what have you. It's just that they still have to make payments to the people that own those loans. Now, unless the federal government steps up, they've passed a $2 billion stimulus package, which is going to send checks to people and what have you. And in some areas of the country that, $1,200 if you're married, $2,400 plus, the kids and all that good stuff, depending on income, is good. If your mortgage payment's $500 or $1,000 a month, that could get you by for a couple of months. But in California, where I'm located, $3,000 a month is barely your mortgage payment, if at all. So, it's really not going to help a lot of people in Southern California, where it may help others. But regardless, chances are you're not just going to be able to come up with some lump sum of cash. So, make sure you're staying in touch with your bank and trying to work that out. But where I was going with this, kind of got off on a sidetrack there, is that unless the federal government comes up with some additional stimulus package to help these mortgage companies for, not having to pay for the investors for skip payments, or coming up with money allowing them to pay the investors with that money so that they can defer your payments for an extended period of time, or allow you to make them up over an extended period of time, I don't see how this is going to work, right? Because somebody's got to make the payments to the investors, and unless somebody steps up to support them, then the lender is going to still require you to come up with this money in due time, because they have to pay someone else. So I know that can be complicated, and I'm sorry for sounding complicated, but I'm doing this ad lib and just trying to address the question the best way I know how. And so one of the other things that has come up is, I'm not in a financial hardship now, but should I reach out to my bank? I have cash on the side to support a couple months payments. I'm not, I don't need the support, but should I reach out? And, for each situation, it's going to be different, and it's hard for me to address it directly. But what I would tell you is it's always, cash is king, especially in the type of market that we're in now, where you really don't know when the end is in sight. We don't know how much further this is going to progress, how much longer the economy is going to kind of be on hold, and jobs are going to be on hold, and what have you. So I would say, if you're even considering this, definitely reach out. Reach out to your lender to see what options are available. That way And if you're in a position to continue making payments, make the payments, right? I mean, it sounds great to be able to skip 3 months payments, but in the 4th month, if you have to make them all up anyway, was it really a benefit? And that's what you have to consider. Now, as I mentioned, I think these banks will come up with additional programs, but as of right now, they have not, and that's where it stands. And then another thing is, this is not just for FHA loans. This is for VA loans, FHA loans, Fannie, Freddie loans. These are basically, all of the loans that are out there for the most part. Now jumbo loans and that sort of thing don't really fall under the initial guidelines that the federal government rolled out with regards to Fannie and Freddie, because Fannie and Freddie are under certain loan amounts. They're federally insured loans by government agencies, if you will, along with VA or partially insured, and whereas VA and FHA are basically federally backed, and so those will fall under the program. But loan amounts that are jumbo and that sort of thing aren't really required at the moment to do anything based on what I've read. But what I will tell you is that most of these banks are going to cooperate, right? They're going to have to, because otherwise they're going to put themselves in a position where foreclosures are coming up and that sort of thing. And none of these banks want that, especially after going through what they went through in 2007 through 2010. So as of right now, that's what I know. But as I get additional updates, I will put them out there for you so that you can use them to the best of your ability and for what they're worth. But what I encourage you to do is that if you've reached out to your lender and you have information differently than what I'm providing to you, please reach out to me. Send me an email, comment below, tell me what they've offered, because I want to let others know that there's different programs out there, right? And it'll give people, the know-how, if you will, to be able to have that conversation with their lender. So as always, I appreciate you taking the time to watch, and we'll see you again soon. And be safe, stay healthy, have a great day. Bye-bye.